And now, Lifestyles Unlimited presents the Real Estate Investor Radio Show.
Welcome to the show. This is Andy Webb with Lifestyles Unlimited. And as always, we're working on your financial freedom. Hey, I thank you for joining me today. I've got a guest with me, a single family and multifamily investor. We're going to hear his story and hear about some of his investments to date. I see a bright future for this gentleman. But I want to present you with three cool scenarios, first of all. Number one, you walk down to the corner store. You drop $5 on one of those scratch-off lottery tickets. You can buy them for $1, $2, $20, but you drop $5, you get $35 back. Hey, congratulations, that's pretty cool. Now, let's add a few zeros. You put $5,000, $5K, into your 401k, and you turn that into $35,000. That's how most Americans do it in that 401k. It takes about 20 years, by the way, with the average annual returns. I just applied 10% in this case, which is on the high side. So, hey, maybe not so cool. That took a long time. Last scenario, let's add one more zero. And this investor, that's what he did. He took $50,000 and he turned it into $350,000, but not in 20 years, in a very short time. So no dumb luck with the lottery either. That's very, very cool. So without any further ado, I want to welcome to the show Jonathan. How are you doing?
Doing good, Andy. Thanks for having me.
Yeah, absolutely. And we'll get to those numbers. How you did it with single family, for example. How long it took. How many did it take? Does it take 10 houses to do that 20? Nah, we'll find out. But to open with, why don't you let the listener know a little bit about yourself? Tell us about your family, what you were doing before you got into real estate investing, and where you're based out of.
Yeah, so I've lived in Dallas my whole life. Wife and I got married a little over maybe 5.5 years ago. I got pregnant about 4 hours after that, and we have 3 kids already, ages 4, 2, and 7 months. So we are on the full Catholic track, as I like to tell people. She's in HR, she's a recruiter, and I was in sales for about 10 years selling industrial hydraulic products. So my degree from Texas A&M is in engineering technologies. I got out, did that for 10 years, quickly discovered that it was not as lucrative as I was told it was going to be, and the hours were long and that whole story. So I actually, about 5 years into my career, I said, man, there's got to be a better way. This was before I was married. I was still single and, living in an apartment, roommates, and I thought, man, what the heck am I doing here? So I called a mentor of mine from Texas A&M, and I said, hey, I know you were involved in real estate. I'd replaced some water heaters for him in college, taking a couple of his classes, and I called him and I said, hey, you're in real estate. How do I start this? What's the step? And he said, man, you need to look at this group. That's how I got my start. It's great education, and they'll teach you what you need to know. And that's how the whole thing started. And real estate attracted me because when I went down this path of realizing working a regular job is never going to get me where I need to be. At the time, my estimates were I needed about $10 million in cash to retire the way that I wanted to with inflation and everything. And I said, man, look at how much money I'm going to have to make every year and say, like, this isn't realistic. So I need to figure it out. So I said, man, who are the laziest people in the country that make the most amount of money? Politicians, right? I mean, so I looked at what all the politicians were invested in, from Pelosi to Trump to all these people, and you look at it and they have millions upon millions and millions, billions of dollars in real estate. And I went, well, this is the route to go. So that's how this whole thing started, and joined Lifestyles with the intention of, okay, maybe I'll learn a couple of things and then I'll kind of break out and do it on my own. And then I quickly realized trying to do it on your own is basically having another job. I mean, you've got to find properties. You got to do it. You got to find your crews. You got to find your team. You have to build this business. But if you're part of a group that's kind of already done a lot of that legwork for you, at that point it becomes passive income and not a job. So that's how it all started. I left my job last November just to stay home with the kids. My wife loves her job. I did not love my job. So here we are. All I'm doing is real estate now.
Very good. So your mentor, your teacher, your professor, I guess at Texas A&M, was also a member of Lifestyles Unlimited. Did I hear that right?
He was, yeah, he was, and I don't know if he still is now or not. He kind of broke out. He got more into commercial. He's running cattle now. I mean, it was the springboard that started him, and I think that's kind of his intention. When he turned me on to it, was this will be a great springboard for you. And then I kind of took it and, one step further than what he did. Very
good. And when did you join Lifestyles Unlimited? What year was that?
It would have been 2015, 16, right around that time. And for the first 2 years, I did – the whole reason I joined the membership was to have access to the vendors. That was the ironic thing. I bought a house that was built in 59 and needed a complete gut job, and I thought, well, heck, if I can get access to the vendors, and get cheaper appliances and cheaper materials, then the cost of the membership is worth it just in that. And then that was the intention at first, and then all of a sudden that changed into, okay, I guess I'll buy a couple of single-family houses, and then that morphed into, well, I guess I better get some apartments as well.
Yeah, and we'll get to the apartments a little later. It's funny. You buy that first house, and it's a little daunting at first, and maybe that's the plan. I'm just going to buy one, see how it goes. But it's addicting, isn't it? You want to do another one and another one after that. You start to see the returns, and we'll hear about your returns in the next segment. But you just want to keep going, don't you?
Yeah, well, one of the questions that Lifestyles members often ask is, how has Lifestyles changed your life? And I always joke, and I said, man, it's made my life horrible. In the fact that I want to save, spending $5 on a cup of coffee now. You look at it and you go, well, I'm not spending $5 on a cup of coffee. I'm spending $35 on a cup of coffee 4 years from now.
Good perspective. If you have questions, email me at askandy@luinc.com. And I'm joined today by Jonathan, an investor from my area here in the Dallas-Fort Worth neck of the woods, and he's buying single family and he's getting involved in multifamily. We'll hear about that here in just a minute. But Jonathan, you mentioned that $5 coffee. I opened the show talking about that $5 lottery ticket. You saw that you made the realization very early that $1 million pile of gold that when I was growing up, that's the number that you strove to attain to be retired, to be financially free, was $1 million. You already made the realization that ain't it. That ain't it anymore. For you, it's going to be 10 million, right? That's where we're headed towards. And you realized, and a lot of people, fortunately, at Lifestyles Unlimited have made that realization as well. We're not going to get there on this conventional wisdom track, that putting $5K into the 401k and waiting 20 years for it to go up sevenfold, that's not going to do it. So you took some action, found a mentor, your professor who was a Lifestyles Unlimited member. That's great. A lot of people come by way of this radio program. Maybe they go out to the free workshop or the case studies, but the important thing is that you did get here. Do you ever do that scratch off lottery, or is that, hey, I got to save that money for my next house? How's that looking?
Yeah, I don't. I'm not much of a gambler. Definitely not anymore. I'll still run my hand at poker, but that's definitely not on things that. Yeah, with odds like that, that's for sure.
No, and of the three scenarios I presented, the most certain one is the one that you did put your money on, which are those houses. Before we get to those houses that you have bought so far, just for the listener, you talked about the program. You mentioned the vendor program, which is part of the financial freedom program. Big deal, actually. I leverage those vendors 10 years later all the time. Aside from the vendor program, a big piece of that membership is the 2-day seminar. I trust you went to the seminar. Did you do that here in Dallas?
Yeah, I did. And my wife was, I don't know, she was pregnant with our first by the time. I mean, I was a member for probably 2 years before I went to the 2-day seminar. So I was not someone that jumped in right away. And when you look back on it, that lost 2 years, cost me hundreds of thousands of dollars. So, you kind of look back on it now and go, well, that was a poor choice. I could have had a 2-year head start on what I'm doing. But, yeah, my wife was about 7 months pregnant, I think, when we went to the 2-day. And so I told her, I said, man, it's going to be a great education. We're both interested, for the money. After you go through college and you spend $100,000 on an education, you look at it and you go, well, that was a waste of money. because it's not going to get me where I want to go. And, when you realize that in your 20s, you feel pretty dumb at that point. But it's, better late than never, I guess. But at the end of it, when they were talking about the different levels of membership, and I don't think that's something we'll really get into here, but
no.
I said, I told my wife, I said, I can do all this. They just gave me all the education that I need. With just the notes that we took in this 2-day course, I could go out, I could find the house, I could buy it, I could rehab it, I could do all these things. And my wife is the one that was not completely sold at first, and she said, absolutely not. You need to become a challenge member. You need to let them do the work so you can be home and spend time with your family. We have a whole house we have to rehab. We have all these things going on. You need to stop. And, she knows me, and she knows how addictive I can be when it comes to work and trying to push that envelope. And she just said, absolutely not. Let them do the work, and we'll take the easy route for once.
Yeah, I want to unpack a few things there. So the 2-day seminar, that's part of the Financial Freedom Program. And if you want to learn more about that, go to the website, givemetotalfreedom.com. It'll talk about that. If you think, hey, what Jonathan's talking about sounds good, I do want to take action, use the promo code, all caps, save big, all capital letters, and that'll give you a 2-year membership. Boy, Jonathan, when I joined 10 years ago, it was $500. Now it's discounted to $297 for the 2 years. I mean, there's a huge online component as well as the live stuff that we do. So that's a good place to go to start. And that 2-day that Jonathan and I were talking about, that's where on the first day, it's the whole day, Saturday, is devoted to investing in houses, single family rentals. And we'll hear those numbers here from Jonathan in a moment. Then you come back for day 2 and you learn about multifamily. Some people say, hey, I don't care about houses. I want to do the apartments. And they go that route. Some people say, you know what, I'm focused. Maybe I need capital. That was my situation. I'm going to go down the housing route. And that's what the challenge membership is, right? You're using the mentors, you're using the agents, all the team to acquire those houses and do everything around the renovations. I'm curious, going back to the 2-day, what were the big aha or eye-opening moments as you sat there? Who was your presenter? Was that David Fisher?
It was, yeah.
Yeah, and what were some of the big takeaways that David gave you that day?
Honestly, the biggest thing, it sounds ignorant now, but knowing what your net worth is. I mean, I know I could tell you, down to $100 nowadays what my net worth is. And that's completely foreign to me because that was never something that even came into my mind before starting this. But knowing what your net worth is allows you to know, okay, am I putting my money where it needs to go to make me money? And that's, I always knew you need to, spend money to make money. You need to make your money work for you. I've heard all these things. I've read all these books, my whole life. But I had no idea how important it was to leverage the money that you have to make that money. And so it was such a simple concept. When he finally said it, I just went, what am I doing? Why am I working 60 hours a week to make less money than I would be using my own money to work?
Putting that money to work. Yeah. He goes into return on equity where he does that. He has you kind of do a back of the envelope calculation for your personal financial statement or net worth. And what's that passive income? That is your return on equity. And for a lot of people, it's a very nominal, very small number. And it is a good thing to track, Jonathan, is that net worth, because that becomes a benchmark. How do I grow that? How am I doing compared with a year ago or 10 years ago, whatever? So you can really...
And that portion is exactly what I was talking about. When we finally figured it out, and I went, man, I'm in my late 20s. Like, I am way better off than most people my age, but I'm still not getting it done. If I want to be retired by 40, there's no way that what I'm doing is going to work. And that was the moment where he had said, write everything down. And so that night I went home and I pulled all the information that I could and went, man, what am I doing with all this money sitting around doing nothing?
Yeah, it's eye-opening, isn't it?
It is. And the crazy thing, and I'm more of a value play guy on these houses, which we'll talk about, but even now, my spreadsheet on all my investments and everything else, I have it broken down. The shift in the mindset is, what's your return on equity? Not what's your return on your initial investment, which always sounds great, and my numbers are great, and things worked out. But then you start looking at what's the return on the equity, and then you go, man, I need to get this money out, and I need to reinvest it because I'm only making, because I made so much money on the houses, now I'm only making 2% on my equity. That's not going to do it.
Yeah, return on equity essentially tells you when it's time to do two things: either sell the property outright to get to those funds and reinvest, or at least do a cash out refinance, reset the debt, and move that money into the next property. So very interesting stuff there. And I want to get to the value component that you just mentioned. Where are you investing? Where are you buying your houses?
So Houston and San Antonio.
Oh, hold that thought. We're gonna head into a break, and let's hear the answer to that question when we come back. To the listener, stick around. This guy has a lot of great information coming your way after the break.
Got questions? Call Lifestyles Unlimited at 855-497-4335. The Real Estate Investor Radio Show continues next.
Your challenge is that you don't believe you can be rich, is that you don't believe you can retire within 5 years. That's half of your challenge. And until you can come up with that belief system, until you can reconcile that in your mind, you won't be willing to take the steps necessary to get there. So you need to get in here and meet some people.
Join us for the next free workshop and meet the people at Lifestyles Unlimited that will share Del Walmsley's belief system and empower you to take the steps you need to be successful. Register at lifestylesunlimitedworkshop.com.
I'm your host, Andy Webb. I thank you for listening today. You're listening to Lifestyles Unlimited's Real Estate Investor Radio Show. And I'm joined today by Jonathan. He's an investor. He lives in my area here in the Dallas-Fort Worth area. And we were just starting to talk about where he has been buying his single-family properties. We're going to finish that question. And then I want to go back to the scenarios I presented at the opening of the show. If you missed the earlier part of the show, go to our website, lifestylesunlimited.com. The show will be archived there. But we talked about his growth from 50 to 350K in a very short time. So let's get to that at the latter part of the segment, Jonathan. We were talking about where you've been buying. You're in Dallas. Where are you picking up your single-family rental houses?
Yeah, so most of what we were doing is in Houston, and then one popped up down near San Antonio that it made sense. I was actually in New Braunfels at the time. My college roommate was his oldest daughter was getting baptized. My wife and I are the godparents, and we were down there on a trip, and that popped up, and it was like 15 minutes from where I was standing. So I drove down there. That was the only house that I have bought so far that I saw before I signed the papers.
Wow.
Every other house that I have bought has been bought sight unseen.
Now, when you're buying sight unseen, is it truly sight unseen, or do you have somebody putting eyes on that property for you?
Exactly, yeah. So, I mean, with technology today, and I have a bit of a benefit in that I've been, rehabbing houses for most of my life, so I know what to look for in homes with regards to foundation and that sort of thing. But yeah, it's, the Lifestyles realtors will go, they'll show it. I'll get on a Skype call or Zoom or whatever, and they'll walk me around the property, and I say, hey, I want to see all the ceilings. I want you to look at all the corners, focus in on all the doorways, and they'll spend 15 to 30 minutes with me walking through a house, and I can get a quick budget in my head. They'll have a budget that they think. I'll have a budget that I think, and then typically it's, they're very, very similar. So, it's not really a sight unseen, but I will say, too, the houses that we're going to talk about that I bought down in Houston, I was not the first tag for people that understand how Lifestyles works. We don't compete against each other. There were people that had options on the property before me in two of these properties, and they passed on them because they thought the rehab was going to be more than it actually was.
Yeah, and to that point, we're 50,000 members strong, and there are a lot of members that are active and maybe take a break, run out of capital. It's always a thing in flux, and some of those members are just starting out. They're green, and sometimes the renovations are a little bit much in their minds, right, for them, so they'll pass, and it'll fall to the next person. Yeah, I've picked up some great deals that way as well, second, third, fourth, fifth in line. So these are Houston houses primarily, and then the one in San Antonio. Have you done any around Dallas-Fort Worth, or are you just looking down south?
I haven't, and the reason is, at least at the time, the deals are starting to even out a little bit across the state now with the market shift. But at the time when I was buying these houses, the deals were the out-of-pocket, the cash out-of-pocket was much lower in the Houston and San Antonio area.
Yeah.
And I didn't have a lot of money to invest. I mean, I didn't have $200,000 to be, to have a $30,000 or $40,000 out of pocket house. If I had bought one house that was $30,000 or $40,000 out of pocket, we would have been, we would have been real close to being tapped out at the time. So that wasn't an option for us. So we had to look elsewhere.
Okay. And as a member at Lifestyles, you do have options. And it's not just in Texas, by the way. Chattanooga. Oh, if we have time, I'll mention a recent email blast I saw from the Realty team over in Tennessee. Great numbers. But let's stick with what you got going on. You mentioned, so this takes us actually to the opening of the show where I said, hey, you took $50,000, turned it into $350,000. How did you do that? How many houses? You had limited capital, we're hearing now. So how did you spread that out? And what kind of time frame are we talking about to make that kind of conversion?
Yeah, so the first house bought in Houston was bought it for $95,000, the rehab. And I drove down there several times, which is not really a Lifestyles member, but it was my first house. It was a giant rehab. It was a flood house. And I didn't feel comfortable completely leaving it to somebody else yet. I was fresh. I wanted to be involved. I wanted to learn. I want, get through the whole process. So the rehab was way lower than it typically would have been because I did some, I hung ceiling fans and if I'm going to drive all the way down there, I wasn't just going to sit on my hands and watch somebody else work. Rehab was 40. It appraised for 184 at the time. So we were, $135,000, $134,000 into it. And it appraised for 184. So our cash out of pocket on that first house that we bought was only $9,300.
Wow. And a ton of equity capture. Wow.
So, and then we got that rented out. The paint, touch-up paint finished on a Friday night, and I had tenants moving in Saturday morning. So it was vacant for less than 14 hours, I think, from the time touch-up paint got finished to the time they moved in.
And people listening right now, that's a common fear is, what if I can't rent the thing? Well, we talk about that on day one of the 2-day financial freedom seminar when we talk about houses. And David teaches you how to get it marketed properly so that you have a situation exactly like Jonathan's. That's great. Low out of pocket, very high equity capture. What kind of cash, what kind of rents were you getting down there?
We're making about $400 a month cash flow. So, $4,800 a year. Our cash out of pocket was $9,300. So, we were making over 50% return. So in 2 years' time, we made all of our initial investment back on that house, and then we still had.
Yeah, a lot of equity still sitting in that. That was house number one. House number two, house number three, similar?
House number two, house number three, similar, not quite as good numbers-wise, but great investments. The house in Magnolia, bought it for $95,000. Rehab was $50,000. I did not pick up a tool for that house. I did no work at all. Cash out of pocket ended up being about $21,000. It appraised for a little over $210,000. So we were into it for $145,000. It appraised for over $210,000. We just recently sold that for $260,000. I should mention we recently sold the first house for $277,000.
Wow.
And it appraised for $184,000 3.5 years ago. And then the last house, and on that one, our returns were that was a really good cash returns. It was about $575 a month, which was about a 33% return.
Yeah, that's good.
Yep. And then the last one was the one in between San Antonio and New Braunfels. Really great area, military base, which is who we ended up renting to, was a military couple. They're absolutely incredible. Bought it for $160,000, rehabbed it for $26,000. It appraised at $240,000, so we were all in at less than $200,000, and it appraised for $240,000. Cash out of pocket was $23,000. The returns were about 15% at about $300 a month cash flow.
Are you still sitting on that one, or is that sold now as well?
That we're sitting on that one. They move out at the end of next month, and we'll be selling it. When we sell that one, even at the low market, we list a little low, and then we let the bidding war ensue so we can sell it and close on it quickly. Even putting that up low, it appraised for $240,000 3 years ago. We'll get over $350,000 for it now.
Wow. So that, to the listener, that is how you take $50,000 and turn it into $350,000. We make money 5 ways on our houses. The equity capture you heard right there, that spread between his purchase price and renovations to the after repair market value, huge in each case. That's equity capture. And then we heard that some of the cash flow, $400, $575 a month, very good numbers. That's coming in monthly. Now, I will say with, you bought these a couple of years ago. Now our interest rates have gone up, so that cash flow will be a little bit compressed. Now, these things have certain trade-offs, and what I'm seeing in the market right now is even more increased equity capture at the moment. So is that a trade-off, Jonathan, that you're willing to take based on what we've heard so far with your progress, more equity?
Absolutely, and you have to understand, too, when the interest rates go up, rents go up.
If you have questions, email me, askandy@luinc.com. And I'm joined today by Jonathan. He's an investor from my area here in Dallas-Fort Worth. But if you've been listening to the bulk of the show today, you've heard that he's not investing in Dallas. He's been buying down in Houston and in San Antonio. And Jonathan, we were heading into a break. You were just talking about if you choose to hold that third house that you picked up, what the rents would be looking like. Go ahead and carry on. Finish that thought for us, if you would.
Everything's inflated. They're raising interest rates to slow down that inflation. Well, all that means for us is rents are going to continue to skyrocket. So if we decide to hold that property, we'll get another $700 a month just because that area has gone up a little more than average, but also because of the inflation. So if we decide to rent that, we'll make an extra $8,600 a year for doing nothing except following the market and what it's willing to bear.
Absolutely. And I do have a question. You're in Dallas. We heard you did do a little bit of sweat equity on one of those houses. We teach you not to do that, but I get it. I'm drawn. I self-manage my properties. I fully understand that. How are you handling Houston and San Antonio? How have you built your team in those areas?
Just with the vendor list, 100% with the vendor list. I did not. The nice thing about the vendor list is if you do have a problem with the vendor, you can reach out to Lifestyles as kind of an intermediary to say, hey, I need some help with this. Now, It's never come to that because we do a great job of vetting those vendors, but that 100% of it has just been, hey, who do you, talking to other members, calling people up, saying, who do you recommend? Oh, I use this person for this. Talking to your realtor and then just going on the website and pulling that vendor information right off the website.
So that's as easy as that. Now, are you self-managing, or do you have a property manager in place for your properties down there?
No, we self-manage everything. It's the Lifestyles model. When they teach you, if you repair everything, I mean, we don't have an old toilet in a single one of our houses. Every toilet is replaced in every house. Every faucet is replaced in every house. And that's the houses that we buy that need a lot of work. So there's nothing to break, and this is why we hold them for 3 to 5 years, is so you don't ever have to worry about any of that stuff. I mean, across 3 houses, I've gotten maybe in 3 or 4 years, I've gotten maybe 10 phone calls, and most of it is, hey, I just wanted to let you know this happened. We went ahead and fixed it, or this, something was going on. Oh, we went ahead and took care of it. So
small
it's
stuff.
Incredibly easy to self-manage.
Yeah, that is the Lifestyles model. Best product, best price. We find these houses that do need some love, and that's why we get them at a discount and create the kind of equity that we just heard Jonathan created across 3 properties. Fix it up, and then that makes our ongoing management much easier. Now, I know a lot of members prefer to hand off to a property management company. That's fine. You choose your path there. But it is fully doable for the listener. Understand this. It is fully doable from afar. I also have a few down near Houston, Jonathan, that I self-manage. There's just not a lot to it. Now, here's where I want to go next. Single family, you didn't do the scratch-off lottery. You said, forget the 401k. I'm going to convert this $50,000 into $350,000 on just 3 properties. That's all it took in just a couple of years. But you're starting to dispose of those. You're starting to sell those. Where is that equity going to land next?
So we've already invested a chunk of it in multifamily. So I mean, we got up that first check that we got from Houston was $120,000, and that was in our bank account in less than 10 days, and then that immediately got deployed into multifamily, into some passive deals.
Very good. And it's interesting, I first learned about Jonathan. It's been a couple of years. I think it was on the early side of COVID, we were out camping somewhere in the RV, and I was watching one of the case studies online, and everything was online at the time, and you were presenting that San Antonio house. I remember that very clearly. And years later, fast forward, we're back doing things in present. I was on one of the multifamily road trips here in the Dallas area up in Denton, and there you were. I said, hey, that guy, he looks familiar. Going through my database, that's the San Antonio guy. So we got into conversation. I was like, you got to come on the show with me. But you're out at these events doing what? You're meeting these lead investors, the people that are putting these apartment investors together, because you're a passive investor is what we just heard. As a passive investor, what exactly are you doing, Jonathan?
A whole lot of nothing.
Yeah. None of that sweat equity hanging fans. You're just putting your money into the investment and waiting. So you're slowly moving. Is the plan to fully disengage from single family, or how do you think, what's the portfolio going to look like, say, a year from now?
No, I don't think we'll ever fully disengage from single family. I mean, the equity capture is just too high, and we're still not where we want to be capital-wise. And the quickest way to build that capital is with these value single-family homes. So I don't think we'll ever completely walk away from it. But it's not realistic to, with 3 small children and God willing, more in the future, it's not realistic to think that we're going to, have 20 single families at a time. So we'd like to, keep 2 to 4, kind of in the pipeline all the time. And then that way, when we do get these big checks, we can just immediately turn around and cut them out to passive deals, or in the spring, I'll become a lead investor and we'll start down that road so I can actually get back to work.
I want to come back to that. I just want to go back to the number you threw out a moment ago. That very first house you got in Houston, we heard earlier that your cash out of pocket, meaning your total into the deal when the whole process is done, right, buying it, fixing it up, refinancing, was $9,300. And if I heard you right, you got a check from closing for how much? $120,000? $120.
Yeah, it was $9,281 or something was our out of pocket on that deal.
All right, there's the engineer coming through, giving us that very precise number. But to the listener, that's the power right there. That's what Jonathan's talking about, keeping a couple of these in the pipeline. The thing with houses is you can turn them extremely fast. It's one unit. What size multifamily investments have you been getting into in terms of unit count?
Oh, it's a variety, anywhere between 30 to 200.
And what are the business plans typically say? 3 to 5 year hold, something like that?
Yeah. We like the value play. We don't need the cash right now. We're not living off this income. We're living solely off of what my wife makes. So we don't have to have the cash on cash. So it's nice. So we only invest in value plays, and that's where we're gonna we'll double our money in hopefully 3 years.
Yeah, and that's the goal. And if you listen to Del Walmsley, he is the founder of Lifestyles Unlimited. He's got a show on during the week at 11, the Del Walmsley radio show. He'll tell you that. Double your money in 3 years. That's the goal. That's what we're looking for in apartments. By the way, speaking of Del, I don't know if you heard this, Jonathan. We will be having a case study in Houston on September 8th, and Del is going to be there. He's going to be the presenter. He's going to lead the case study. So for the listener, if you're in Texas and you can get down to Houston, great idea. You want to hear this guy talk. Del is a wealth of knowledge. We'll be celebrating our 32nd year as an organization. And if you can't get down there, go check out this website. It's lucasestudy.com. LU stands for, of course, Lifestyles Unlimited, lucasestudy.com. You can register and attend from afar. So, Jonathan, I don't know if you heard about that, but yeah, Del will be presenting. And boy, when he's present at these things, big turnout for good reason. Any plans to go to Houston, or maybe tune in online?
We sold all our houses in Houston. I don't have to go down there anymore. No offense to the people living in Houston, but if I can avoid it, then I will.
Yeah. Well, hey, tune in. Be sure to tune in. Again, that's on September 8th for the case study. And again, going back to how I met Jonathan, it was also from afar, digitally, over the internet when you were presenting your great numbers a couple of years ago. It's a great opportunity. Anybody can attend that. So for the listener, if you have questions, again, feel free to reach out to me Ask Andy at luinc.com. So the future, you mentioned being a lead investor. So you've done the houses, single family, going to keep doing those, getting into the multifamily as a passive investor. And now, next year, looking to be a lead. What does a lead do? What is your plan?
A lead is basically having another job. So, like I said, I left my job last November. It's been a great vacation, if you want to call it that, actually spending time with the kids, not traveling all the time, all those things. But a lead is not the passive. It is not the easy money. It is none of those things. It is a job. It is, you are the one responsible for your money, for your investors' money, and it's something that the leads and lifestyles that I've dealt with so far, they're just so incredible, and you can tell that they are much more willing to risk their own money than risk yours, and they take it even more to heart when other people invest with them. So the lead is responsible for finding the deal, for the financing of the deal, for fighting the taxes on the deal, for the insurance on the deal, for marketing the units, for making sure the tenants are paying, for the maintenance. I mean, they are responsible for managing that property 100% for themselves and their investors.
Absolutely. Well put. They are doing it all, which is why you and I as passive investors don't have to install those fans or do any of that sweat equity. We don't want to do it at this point. The lead does, and that's their job. And they do have skin in the game. So they're interested in seeing that apartment invest. We're speaking specifically to apartments here. They're interested in seeing that perform as well. So great track record, Jonathan. We're headed to the end of the show. I thank you for joining me today and sharing all that great information. I hope the listener is inspired. And again, if you want to learn more about that case study, go to lucasestudy.com or any other case study. You can come out in person in Dallas, go down to Central Texas, Phoenix, wherever we may be having these. We hope to see you there, or at least join us online. Jonathan, hey, stay-at-home dad like I am. Go enjoy the day with your kids, and I'll see you at the next event. Thanks again.
The information and opinions you hear on the Lifestyles Unlimited Real Estate Investor Radio Show are those of the hosts, guests, and callers. The Lifestyles Unlimited Real Estate Investor Radio Show is for entertainment purposes only. Please consult a professional regarding your personal investment needs. Nothing presented constitutes